and we'll explain more as the week goes on. But many of you are aware of holiday schedules and so forth. This is not my schedule. This is the NYSE, NASDAQ, OCC, all that kind of stuff. But anyway, we'll talk about that later in the week. Let's get to 3 at 3 right now. 3 at 3 presented by me, Jon Najarian, for the 19th of December. The disclaimer is, as always, that all investments involve risk and that you need to be aware of that. This is presented for educational and informational purposes only, full stop. Intellectual property rights, we have patents, we have trademarks, we have copyrights, we have registered marks on virtually everything you're about to see here. So please ask us before you reproduce it in any form and cite Market Rebellion. Thank you. All right, how'd this one work out? Pretty good, I'd say. Thursday last week, we talked about CRE and the unusual call buying we saw there. They were the end of December, the 31st of December expiration calls at the 100 strike. And these calls, they bought 3,500. They've bought more since then. And these calls have made us a very nice profit. Let me just put it that way. Now, here's how it's played out today. Today, it crosses 102. So that was 94.5 when we cited it. Shares are up another 4.5% today. But quite frankly, the reason I trade options is not to make 4.5%. It's not even to make 10%. The reason we trade options is to make hundreds of percent. And you can do that too. This opportunity presented by this unusual option accumulation, which our heat seeker algorithm kicked out, allowed us to piggyback on that smart money and ride this one to the upside, and ride it we have. These options expire the 31st, so what have I done? Well, I've rolled up because I was in the 95-100, doubled my money there, rolled up to the 100-105, have made money in this spread, and I'm looking at perhaps rolling again, depending on how this keeps going. But this has been a heck of a ride, and I hope if you follow us and if you make investments, that you're smart enough to take some profits along the way, because believe it or not, folks, that's how you stick at the tables a very long time. You must take profits and cut losses. How about this one from Friday, the 18th? My brother Pete on the halftime report talked about Nike. Nike was down over $2, and he talked about the unusual option activity buying at the 150 strike. As you know, as I said on Friday, I did not buy the 150 strike, but this one has worked out rather nicely as well, because Nike has moved up from, as you saw here, 138.41 to 144.24. So in rough terms, it's up about $6. That's a nice trade for the stock. You can imagine that the options did make hundreds of percent returns on this trade. And again, that's why we trade options, my friends. I'll talk about it tomorrow on the halftime report. I'll be on the halftime tomorrow and again on Wednesday this week. Thank you to all of you. We have now topped, I think, 7,500 subscribers over to our YouTube channel. The reason you should consider it is that it is a free subscription at YouTube. There is no cost. And what you get is, if you click that little bell up there in the upper right-hand corner where we've got that yellow arrow pointing to it, you can get alerted to every time Pete has a new take that gets posted up to YouTube. Every time I do a 3 at 3 that gets posted up at YouTube. Every time I do my 60-second video in the morning that gets posted to YouTube. You get the idea. Also our compound interest and so forth, the podcast. You get all of that. You get it free. All you got to do is go to Market Rebellion when you go to YouTube, and you'll see it. Thank you. Oops. So let's start off with silver ETF today. Somebody buys 10,000 of the February double nickel calls, the 55 calls. They bought them in two prints, basically paying $1 for these calls. So that means $100, 10,000 times, that's $1 million trade. That's why we follow $1 million trades, because they're all too often very, very right. So silver, bullish call buying, let's call it $9 above where the ETF is right now. Yes, you've guessed it. I did not buy those. I bought a lower strike and sold a higher strike against it, 1-to-1. Let's take a quick look at the chart. There it is when it was moving up from 42 last Tuesday, because that was the low last Tuesday, I believe. It's already up $4 since then, and threatening apparently to go a lot higher. That's the silver ETF, SIL, silver miners. Bang! Talk about bang. Tonight, 4 p.m. Eastern, 3 p.m. Central, we've got the one and only Gene Munster on for Tech Talk. And Gene is going to be leading us through his observations of the tech sector. He's been one of my favorite analysts to follow in this space. He is a humble guy, but he doesn't really need to be humble, but he is. His picks are outrageously good in the tech sector, folks. So if you'd like to watch and listen to what Gene Munster, one of the top-rated analysts, has to say, he's with Loop Ventures, L-O-U-P, that Loop, not the Loop with Courtney Gibson, L-O-O-P. But I'm sure they're friends, and I'm sure Gene's insights will both amaze and prepare you for 2021. So stop by. It's free. You just have to register at Market Rebellion, and you could be joining us, perhaps even asking Gene a question this evening. Thank you. Get to our second of the 3 at 3, Goldman Sachs. Yep, it's languished for a long time. Could it be breaking out? Yeah, it could. This Thursday, we see unusual option buying that expires this Thursday. That buying was today, was triggered by 12,200 of these calls, the December 260s, with the stock at 257.50. That's 257.50, and they're buying a $2.50 out of the money call, and they're paying between $1.64 and $3.60. You're probably thinking to yourself, why didn't they just buy them at $1.64? As they were buying them, they kept running the price up and causing the hedging that goes on when people sell an option. They don't just fade it. They generally are buying the underlying against it. If it's calls, if it's puts, they're selling the underlying against it. So anyway, when we see unusual buying of this size, so for instance, 12,000 times, let's say the average is $2, $2.50, whatever it is, 12,000 times $2 would be $2.4 million trade. Throw it to 250 and you have to throw another chunk of money on there. This is a big trade worth watching and worth following. I followed him in. I am in this trade. Bang. Here's Goldman today, moving up just moments ago to 258.60. So it's up $16 plus, $6.80. An explosion to the upside. And we are happily riding right along with them in Goldman Sachs, symbol GS. Bang. Third for our 3 at 3, and then I'll get to some questions. FUBO. fuboTV. Somebody buys 4,400 of the Jan 45 calls. That is an in-the-money call by 80 cents because the stock was $45.80 when they bought them. So they paid $4.20 up to $6.74. $4.20 is $420 each option. $6.74 is $674 each option. That's big trading, folks. This is another $2.5 million trade when you're buying 4,400 of something at $600 each. So, as you might imagine, I follow along with them. And as it rallies, I'm hammering out calls 1-to-1 against calls that I've purchased. My hands go towards me, I'm buying. My hands go away, I'm selling. I bought calls, the 45 calls. I'm selling higher strike calls against it. This is one example, not giving you advice, but this is one example. You could buy those 45 calls, pay $7.95, sell the 50s for $6. You've thus paid $1.95 for that instead of paying $4 or $6 or whatever. How does this work? Well, if you do it 1-to-1, bull call spread, call vertical spread, you have no additional upside risk, and you have cut your impact, negative impact of time decay, which is theta, and volatility, which is vega. Both of those can work against you if you just purchase an option. But in this case, I'm putting less than a third of the money, because keep in mind, somebody was paying $6, right? Somebody was paying $6 for these calls. I've put a third of that on the table, less than $2 on the table. And if the stock goes to 50 or higher, I've turned a $200 investment into $500, $300 pure profit, 150%. Like I say, that's why I trade options, to make hundreds of percent, not to make little pittance here and there. So this particular trade is still available, still out there. Keep an eye on it. You see the green arrow, 6,900 of those FUBO calls have traded, the 45s in January. As you saw up on here, it was only 4,400 earlier in the day. Now it's almost 7,000. And the other 9,300 of the 50 calls. So there's plenty of liquidity in this one right now. Bang! You want to learn about how to do spreads like those 1-to-1 bull call spreads and so forth? You want to know the best time to do them? Do you want to know how to set yourself up with for instance, a iron condor, a butterfly, a risk reversal? You want to learn how to do any of that? We can show you how. We can show you how to trade stock, options, futures, cryptocurrencies. Yeah, crypto's been on fire, and we've been happily riding along with it. For all of those folks out there who gave me a hard time in 2017 about it, I don't think they're laughing anymore. Anyway, you can go to marketrebellion.com. Like I say, we have courses in cryptocurrency, courses in stock and technicals and futures, and courses, of course, in options. All of that by going to marketrebellion.com/get started. Questions? Anytime you can send them to my Twitter handle, which is @Jon Najarian, or to 3@3UOA. That is, if you're listening on Sirius XM, @3, @3, the number, and then _UOA. And that's how you can get us questions, and hopefully we'll answer yours in one of these broadcasts. Let's get to the first one today. PIO. Any opinion on the Invesco Global Water ETF? PIO. Great chart. Yes, it is, Anders. Anders is ANDRESATASSI. Thank you. We always like to share your Twitter handles, folks, when you're nice enough to ask those questions. Hopefully get you a few more followers as well. And what's my opinion? I like it. I like that, but I also like 3 others. Let me show you. So this is not to say that Anders is wrong, but pull all 4 of them up, PIO as well as CGW, FIW, and PHO, because they have different holdings in each of these. They're not all the same. And some of them are over $1 billion in holdings already. Some of them are as little as $200 million. You've got to decide which one's appropriate for you, but I do like them. I do think water is a precious resource, and I think these are ways to play it. PIO, CGW, FIW, and PHO. Check all of them out. I think you'll end up being happy having these in your portfolio. All right, Radio Shorts, and his handle or her handle is radio, RADIO _shorts, SHORTS, replying to Scott Wapner. Gambling is not investing. And Pete Najarian and Jon Najarian, buying stocks live on your show is a circus. You never ask them what they're selling. That's not quite true, Radio Shorts. In fact, last week I was describing on Wednesday when I was lightening up that I had sold from a 4% cash holding up to a 20% cash holding. So I'd say I described that. They fully disclose to all of you our holdings on air. And if I purchase something that I talk about on air, they also ask me to disclose that, as well as they ask Courtney Gibson, Josh Brown, Stephen Weiss, Shannon Scotia, Carrie Firestone. All of us collectively have to disclose for CNBC. It's not the law, but it's the rule that we disclose what we have bought and what we have sold. And if I buy something during the show and then you'll hear me say that, hey, I bought these during the show, Scott. Now, we don't always get to say where we sold something, but that's because they don't want me to dominate the show. I trade a lot. Most of the other people who are very smart, I mentioned names just a moment ago of a number of people that I could throw Joe Terranova and a bunch of other nice people into the mix. They'd never get to talk because I trade an awful lot. My brother Pete and I probably trade 10 to 20 times a day, in and out, as well as our existing holdings where we're constantly monitoring them and rolling them and so forth. So radio shorts, I hear what you say, but I'm trying to describe for you that I am a dynamic trader. I'm not just a buy and hold guy. Nothing wrong with that, but that's not my style. That might be your style. That's not my style. And so Scott does ask, well, Doc, why are you lightening up here? Why are you? I said last week, and I remember saying this, Roku. Now, I'm not saying I'm right. I'm not saying Roku's bad, but I remember saying on air, because I had sold the whole position, that I had sold the whole position. So I think it's an unfair criticism to say that we don't say when we're selling, when, again, I need to be live on air all day because I'm buying and selling from the time I get up and the markets are liquid enough for me to trade, which is usually by about 8 a.m. Eastern is when I'm able to do that for the most part, unless there's just a whoosh lower and I can take advantage of that with the futures. And I do that until about an hour after the market's closed. So I'm sorry if it doesn't suit you, but I'm just trying to be real, keep it real. Tesla. Question out there for all the Tesla option traders out there. Was the official close really $6.95? Who has stories about long out the money? That's what OTM means. Calls that expired on Friday. Or who has stories about short out the money calls that expired on Friday? I don't ride my options all the way into the bell. So if I have options, and I did on Tesla, I rolled them earlier in the week. I don't like riding them into expiration. It becomes a binary bet at that point. In other words, it's like flipping a coin, heads or tails. Am I going to make money or lose money? I'm a guy who wants the odds moved into my favor. And I can do that by not being in these trades right up until expiration. An exception to that rule is if I want it to get called away. So if I had a Tesla call, and let's say I had the 670s, and the stock is, as you say, $6.95. That's obviously $25 in the money. And I decide, you know what, John, time to lighten up a little. Tesla's becoming too large a part of your portfolio. I would let it get called out. That is not the case. I didn't have the 670 call, and I did not let my Tesla get called out. But I'm giving you an example of why I would stay long or short an option position to expiration. So I hope that helps. But yeah, Tesla, been a true believer. I'm one of the few people on the desk that has owned it from sub 200, and that's before the 5-for-1 split. But I'd be bragging if I said any more. I just love this company, and I love Elon Musk. Thank you, Mr. Musk. If you'd like to learn more about unusual option activity or anything we do, please go to marketrebellion.com/UOA. That is marketrebellion.com/UOA to learn more about it. Thank you, folks, for joining me. It's a pleasure to share this information with you. Please tell a friend about the broadcast and have a great day. I'll see you tomorrow. Bang on the halftime report.